Hello and good morning, folks. Welcome back to Almus Market Mornings, your daily dose of financial updates with your host Shikhar Garg. Now, we hope you have had a good weekend breather because the turbulence in the financial markets can continue as the volatility and rest of the parameters continue to stay high. And if you have missed any of the last week's update, we have also released a weekly wind up for you to give you a glimpse of what has happened in the last week a bit too quickly. So coming back on today's update, we've seen a lot of things happening over the weekend, but on the primary front, we've seen the French election. Le Pen lost, and now we see Macron coming in again. I don't know whether it's taken as positive or anything difference we are yet to see, and it will be available for us when the European markets open. But by far, it looks good. For further updates, JK, please tell us what's going on.
Hello, good morning. So we are suddenly back into the risk off mode, rather sharp risk off mode today, and that started on Friday US session itself. In fact, Dow Jones and Nasdaq both plunged on Friday into one of the worst losses since the times of pandemic. In a late reaction to Fed Chairman's remarks, as well as two global agencies, World Bank and IMF, downgrading global growth, stocks have taken a beating. So we have inflation being hyped up, and then have growth being downgraded across not only by analysts but even by global agencies. This is not a good situation to hold to risk assets, and that's the reason why you saw a big plunge in the stock markets on Friday. And significantly, for the second successive week, a good amount of outflow was seen from mutual funds in the US also, and some of the core economy stocks earnings came quite poor, with feeling that high costs are already having an impact on them. Of course, we have had the same carried over into the the Asian session. Macron's re-election was not a factor for euro or the dollar. Rather, it's not rather improved any sentiment on the stock market, where people are struggling to hold on to risk assets in the face of deep losses in bonds. So it is like people are selling these assets and turning into cash, probably wait for an opportune moment to re-enter those assets when the conditions improve. Of course, we also had a big fall in the oil. Oil fall is driven by two factors: reassessment of global oil demand by both IEA and the OPEC, which is seen to be lesser. And then we have increased shale oil production by the US companies. So altogether, oil has been pressured down. Of course, we have also been talking about the higher financing costs, making it difficult for the speculative holders to hold on to their positions. As far as the dollar is concerned, it has been driven higher again on Friday, and in fact in the Asian market even further. And important point to note is that emerging market currencies have taken a beating this time, almost 1.5% fall in the last week, matching that of the rise in the broader dollar index. So the narrative behind dollar's ascent has remained consistent for most of the year, and Fed Reserve is on the verge of a series of significant rate hikes, while other major central banks are not matching that. Hence, the widening interest rate differentials are propping up the US dollar. Euro has, as usual, continued to test the lows, although it's so far holding at the important level of 1.075. Also, the yen possibly now caught between the risk of and the widening differential with the US. So it's hovering between 128 and 129. But at least we are not seeing any even verbal intervention from Japan in the last two sessions. We do have lots of data this week, and important of them to be noted is the durable goods orders tomorrow, GDP on Thursday, and all important PCE core inflation on Friday. The PCE core inflation, both for the year on year and the month on month, is expected to slightly moderate. That may give some relief to the markets. And as far as the rupee is concerned, we have had a very measured weakness in the rupee, with markets seeing interest on both sides. So far, people have been selling the dollar. One is for the export hedges, as 76, 40, 50 is seen closer to the all-time highs. On the other side, expectation of large inflows for IPOs of LIC, driving them to take much larger hedges against the INR strength. But after the announcement that LIC IPO is being cut down to less than half of what it was expected, there has been some reassessment of the view, and rupee has now started to actually move in line with other currencies, but not at the same pace. So if you look at EM currency index, it has fallen 1.5% last week, but rupee hardly lost 0.5%. So there may be a lot to catch up with the other currencies as far as the rupee is concerned. But again, everything depends upon the RBI. We have a strong resistance between 76.55 and 76.65. A break of these, if allowed by RBI, can lead to a retest of all-time highs near 77. So we have once again start to the week with lots of things happening in the global markets. Nothing is settled. Everything is in a state of flux, and we will be seeing more of it in the coming days. Thank you. Have a nice day.
Okay, JK, that was good. And as we can see, the rising prices have taken its influence on the earnings over the period of time. And like you've mentioned, the higher financing costs are again going to impact. What we also saw was crude came down a bit, but there was still a good amount of outflows for all the major EMs. And that also gave an impact on the EM currencies by 1.5%, as JK mentioned, but our Indian rupee is yet to catch up. So, guys, there's still some scope. Let's see how our rupee actually fares against dollar and rest of the currencies. We hope you guys continue to manage your risk. Till then, we take goodbye. We'll catch up again tomorrow. That's it.